Good evening and welcome to today's video. Now, in today's video, I will take a look at the paint sector. I will look at Asian Paints, Berger Paints, and Kansai Nerolac. Now, I've chosen to look at this sector as I believe the sector will be facing a lot of headwinds in the coming weeks and months. Now, there are fundamental reasons for it and there are technical reasons, which I'll cover when we come to the chart. Now, the fundamental reasons why I expect this to happen is due to, number one, the rising price of crude. The rising price of crude has been putting a constant pressure on the paint sector's margins, and I expect this to only worsen in the coming weeks and months, which in turn will hurt the equity price of most of the stocks. Now, the second point, which I would say is been putting a pressure and also going to continue putting a pressure, is that India has been witnessing a higher than usual inflation rate in the past couple of months. Now, this has caused a lot of belt tightening to occur among the middle class, who are basically, I would say, the large consumers of the paints. So I expect this to continue having an effect, as they will prefer to spend the money on things that are rather more of a necessity than spending money on things that can be postponed onto a later date. Now, the third factor which I believe will affect the paint sector is what is coming everywhere, is the entry of Grasim Industries. Now, I expect Grasim Industries to do another, once they come in, they will want to break the market and be more competitive. So I expect lower prices and everything, which will put more pressure on the margins of these paint stocks, and I expect the margins, not in this coming quarter, but in the quarters to come, to have a basically further hit due to just simply this factor that the entries of people like Grasim and everything. Now, a lot of people will say there's brand loyalty. People who want to buy Asian Paints or Berger Paints as they're loyal to these companies. I don't believe that factor plays well into the Indian consumer market, because if you look at the Indian consumption market in general, forget only the paint industry, it is generally a price-sensitive market. So now, I expect that when a consumer goes, let's say a middle-class consumer goes to a shop to buy a tin of paint, they're not going to really care whether it's written Berger Paints or Grasim or any other company, provided the quality is relatively good and the price point is lower. So I expect that brand loyalty aspect to be thrown out of the window. Yes, it will be there in the consumers who are falling under the upper middle class and above, but the major chunk of the consumption in India will be following this price sensitive model, which will hit Asian Paints and Berger Paints. Either they'll have one option, cut prices, or which will also affect profits, or lose market share. So these are the fundamental reasons why I expect this to affect these names. Now we'll cover them on a technical aspect of what I expect the stocks to do in the coming weeks and months. Now, the first one I'm looking at is Asian Paints. Now, if we look at Asian Paints, it formed a top in basically July of this year, and after that it went down and it's been in a box range. So I believe it's better we look at it in the weekly chart. Now, in the weekly chart, I believe any up move which will come will end up either trying to break 3255, and even if it manages to do that, it will go up to 3350 and then it will fail. I expect this to be a resistance zone that will challenge the investors in a huge way, and I don't expect the stock to break this anytime soon. This is, as I believe, how it is trading as of now in terms of a technical pattern. We had one downswing, then we have entered a box range that is just going to rattle more and more investors. Now, the minute we break the low of this 3130, I would say, then we're going to be going down towards 3050, which is also roughly where the 50-day moving average is. And once we break 3050, we'll be going down towards 2900. This is, in my opinion, Asian Paints in the coming weeks and months is going to be going down to 3050 and then 2900. It's a very bearish view, and a lot will not be, who will be holding the stock will oppose it, but I believe this is most likely going to be the scenario due to the fundamental reasons which I explained, and the chart is also showing that. Now when we come on to Berger paints, now Berger paints, we have to drop to the daily chart. Now when we look at the Berger paints daily chart, it's loading, we see that the stock has had a very volatile couple of days. It managed to make a high of 681, and after that it has come tumbling down. Now Berger paints has nearly wiped out all the bullishness it had built from 13th June, and as you have come back towards the simple support level at 555. Now in the coming sessions, I expect Berger paints to give a dead cat bounce, and this will be the perfect trap which will be set for equity traders, as the bounce they'll believe is going to be going up, and the stock will in the coming weeks test a high of 681. But I don't believe that's going to be the case. This is as all up moves or any dead cat bounce I expect will not be able to take out 618 at max. So I expect any upward move to have two resistance. The first is the 50-day MA at 592 basically, and 618. I expect these two to cause hell for any up move, and overall Berger paints is also gonna have dead cat bounces which are gonna go that way, but the longer term picture in it is that we're going to be coming down to 530 rupees and then 510 rupees. That in my opinion is going to be the fate of Berger paints in the coming weeks and months. Yes, there will be dead cat bounces, but those will simply be traps for the gullible equity investor who is only looking for longs rather than looking at the hard facts of the stock. Now the next one is Kansai Nerolac. Now Kansai Nerolac, I have been seeing on Twitter especially, a few are recommending it as a buy. Now I am not understanding why they're doing so and which logic are they using. As if we look, basically Kansai Nerolac, this was August last year, and September. So basically in 1 year it has not moved anywhere, number one. It basically went to the same point, and last year it had made a high of 357 and got rejected. This year made a high of 354 and got rejected. So basically we can see that it's clearly a bearish pattern. And then we see, if we look at the bearishness here at the top, is severe. It has managed to also break below the 50-day moving average, so things are not good. So any dead cat bounce that happens, I expect will get killed at 332 rupees. And that's the quant resistance level that's going to make a difference now. So how I expect Kansai Nerolac to trade in the coming weeks is I expect it to break the simple support at 314.85, and a break of that will take it to 305. Once it reaches here, I expect a bit of a sideways move which will help rattle the equity investors a bit more, after which it's going to go down to 285. Out of all three, I wish Kansai Nerolac was in the futures and options market, as this would be the best shot out of all the three for basically, let's say you could do it in October series and November series, and it would give a very good return. But unfortunately this is not in the F&O market. So I expect all these three stocks to face downward pressure in the coming weeks and months, and I expect them to fall to the levels highlighted. Only time I'll change my opinion is if they manage to take out the quant research levels with severe bullishness on the weekly charts, then we can say there's a change in dynamics coming. But as of now, I believe these stocks are going to have a rough couple of weeks ahead. Thank you for watching, and if you liked the video, then please hit the like button and also subscribe to the channel.